Welcome to This Explainer. If you're dialed into the digital economy, you are absolutely in the right place today. Earnings season just handed the fintech sector its receipt, and wow, it is a remarkably good one. Peak earnings week kicked off with a massive 132 companies reporting, and the fintech corner of that pile, it was absolutely stacked with record-breaking success stories.
We've got a great lineup today. First up, the heavyweight, Visa. Second, the comeback kid, PayPal. Third, the unsung hero, TransUnion. And finally, we'll break down their three very different playbooks. Think of this week's earnings like an Olympic podium. We've got our gold, our silver, and that quiet third-place finisher that nobody saw coming, but everybody really should have.
Section 1, the heavyweight, Visa breaks the ceiling. Let's start with our gold medalist and see how this all builds. Visa is our undisputed heavyweight for the week, and they didn't just hit the ceiling, they shattered it. In their fiscal third quarter of 2026, they delivered just an incredible performance. Net revenue hit $11.6 billion, which is up 14% year over year, and their non-GAAP earnings per share climbed 11% to $3.32. Unsurprisingly, both of those metrics comfortably beat Wall Street's expectations.
But here is the real headline, the number you literally cannot ignore: $4 trillion. For the very first time in the company's entire history, and remember, this is a company founded way back in 1958, Visa's global payments volume surpassed $4 trillion in a single quarter. That's up 10% on a constant dollar basis. I mean, it is just a mind-blowing statistic to try and wrap your head around.
Now, what's incredibly fascinating is how exactly they pulled off that massive scale. As the world's largest payments network by volume, Visa leaned heavily on cross-border strength, which was up 13%. They also saw a massive 34% jump in value-added services, bringing that specific segment's revenue all the way to $3.8 billion. CEO Ryan McInerney credited highly resilient consumer spending for this. Oh, and surprisingly, he actually cited the FIFA World Cup buildup as a major tailwind. Yeah, apparently global soccer preparation is now significant enough to be a literal line item on a multi-billion-dollar earnings call.
And this brilliantly illustrates our main takeaway for them. Visa is quietly proving the cashless economy thesis is done being a thesis. It's just our reality now. $4 trillion isn't just a big number. Visa didn't just beat estimates this quarter, they completely moved the goalpost for what the word big even means in the payments industry.
Section 2, the comeback kid. PayPal flexes its comeback. Stepping down slightly on our podium, we have the silver medalist, PayPal. Now, you know the story. For the last few years, PayPal's stock has been picked apart like a fantasy football roster after a disastrous Week 1. But they just posted a Q2 2026 that proves a real, tangible redemption arc is fully underway.
Let's look at the Q2 snapshot. PayPal posted an adjusted EPS of $1.38. That is a nearly 8% beat over the street's estimate of $1.28. Revenue grew by 5% to $8.68 billion, and total payment volume rose 10% to $486.4 billion. Now, CEO Enrique Lores humbly called it a solid second quarter. But when you follow up a statement like that by actually raising your full-year adjusted EPS guidance to roughly $5.38, yeah, that counts as a major flex.
So, the crucial point is how they managed this beat. The secret sauce? Smart diversification. Think of it like this. On one side, you have the aging veteran, their original branded checkout. It's been weighing them down a bit in recent years, like an anvil, but it's finally finding stable footing and quietly putting up serviceable, reliable numbers. But then, on the other side, you have the breakout rookies acting as total rocket fuel. Buy now, pay later volume shot up 26% year over year. Venmo debit card monthly actives surged more than 50%, and overall debit and tap-to-pay activity up over 60%. The main takeaway here is crystal clear. PayPal isn't just surviving, and they aren't merely stabilizing their legacy systems. They are actively, aggressively diversifying their way right back into the top-tier conversation of the digital economy.
So we have our heavyweight breaking global records, and our comeback kid finding its stride once again. But who took the quiet third place on the podium? Who is the least flashy winner of earnings week that absolutely deserves your attention?
Section 3, the unsung hero. TransUnion cashed in quietly. Based out of Chicago, this credit bureau competes in the trenches daily with giants like Experian and Equifax. They do the highly unglamorous but utterly essential job of telling lenders who is actually good for the money they want to borrow. And while nobody was really watching, TransUnion quietly cashed in.
Seriously, listen to these growth stats, because this might actually be the best quarter of the entire bunch.
TransUnion posted Q2 revenue of $1.31 billion, which is up 15% year over year. On the bottom line, adjusted EPS came in at $1.23, solidly beating last year's $1.08. And if we look specifically at their U.S. financial services segment, revenue jumped an impressive 18%. This massive beat sent their pre-market shares up nearly 11%. According to CEO Chris Cartwright, the main driver here was incredibly durable fintech lending demand.
So the crucial point here is their astonishing consistency. This quarter's 10% organic, constant currency revenue growth marks TransUnion's 10th straight quarter of at least high single-digit growth. Let that sink in. That is remarkable, especially when you consider they are pulling this off while mortgage activity remains heavily pressured by a 10-year yield creeping toward 4.7%. They consistently succeeded in a really tough macro environment, and management felt confident enough to raise full-year guidance.
Section 4. 3 very different playbooks. Let's step back and zoom out for a minute. We've just seen 3 very distinct strategies play out here today. What do these performances actually mean for the broader digital economy? And why does this matter for you as a focused learner tracking these markets?
Okay, let's dive into this recap. We essentially have 3 totally different playbooks that all won the week. First, Visa proved that pure scale is an incredible, almost unbeatable moat, literally moving the goalposts with $4 trillion in volume. Next, PayPal showed us the sheer power of diversification, leveraging new products like Venmo and Buy Now, Pay Later to stabilize and grow past its aging checkout system. And finally, TransUnion demonstrated that being the essential infrastructure, the behind-the-scenes plumbing of the financial world, yields quiet, highly consistent growth.
I want to leave you with this final provocative thought regarding TransUnion's success. Boring, essential infrastructure can still post a double-digit beat. The flashiest names with the biggest marketing budgets don't always hold the best playbooks. Sometimes the real winners are just quietly keeping the economy running in the background. So ask yourself, does your portfolio or your industry analysis favor flashy scale or quiet infrastructure? Keep that question in mind as you analyze the next wave of earnings. Thank you so much for joining me for this explainer, and stay curious.